Welcome back. Well, steady for the markets. We have the mid-cap index, which is lagging a little bit, so just about higher by around 0.2% as compared to the Nifty, which is showing much better gains today. But let's talk about or deep dive into a certain number of sectors, IT and auto to be specific. We have with us Nitij Mangal, who's the auto and metal analyst of Jefferies India, now joining in to discuss a couple of his reports which he's penned. Nitij, hi, welcome to the show. Well, one of the topics that I wanted to start with is your interesting report on data centers, where you expect the market to grow by around 5x by 2030, and the key beneficiaries would be the likes of Bharti, Reliance, and Adani Enterprises. Just take us through the crux of this report and what is it based on?
Hi, thank you, Ekta. Thanks for having me on the show. So on the AI side, we do think it's a pivotal moment for India. And while, yes, there are some concerns around how does job creation happens, especially on the services side, we do think there is a lot of opportunity on the data center where we think the market on the leasing side can go up 5x in about 5 years. So the telecom companies, we believe, are quite well positioned to realize this opportunity. There will be opportunities in the companies that will be providers to the data centers as well. And we can't discuss specific names, but this is, in our view, a very big opportunity for the Indian corporate space.
The published report has said that there would be names like Bharti, Reliance, and Adani, which would form nearly 35 to 40% of India's data center capacity. But apart from the ones who own capacity, would there be any ancillary plays to the data center? Maybe the ones who construct it, some sort of wiring companies, real estate companies who are building these data centers, etc. For everyone, third-party names. Could there be any other ancillary opportunities here as well?
Yeah, of course. So we do think there is an opportunity for companies in electricals, power, cooling system, etc. So the reality is that a lot of the server and the compute opportunity will be captured by companies which are more on the semiconductors and hardware side, where a lot of content comes from outside of India. But a lot of facility-based capex that will get captured by the ancillary companies.
And if you could, maybe not specifically name a few in particular, but randomly give a list for people to reckon with. And these are not recommendations. The disclosures up and clear for the viewers.
See, Mangalam, as you know, we will not be able to take company-specific names. But one can think of companies which are pretty prominent in the space of, again, like electrical power distribution, cooling systems, etc. We have covered quite a bit of those in the report, but I'll not be able to take any specific names on media, I'm sorry.
Okay, sure. The other aspect that you all are looking at is the impact of AI on large-size IT companies. What do you think is going to probably pan out in the next couple of quarters or maybe 1 to 2 fiscals when it comes to AI? And how are you then placing yourself when it comes to IT? Do you prefer the mid-sized, smaller companies then?
So maybe let's talk about the next couple of years rather than quarters. We do think AI is going to create revenue deflation. Our broad thought process is that the existing IT revenue streams will see almost like a 20% deflation over the next 3 years. But yes, that also gets offset by new business creation. So overall, there is growth, but it is a slower growth than what we have seen, let's say, over the last 10 years. And then companies that are preferred are maybe more the mid-sized companies or maybe companies which are more nimble in adopting to this opportunity. But the revenue deflation and the implications of that on valuations are going to be a concern for the IT sector from here.
So when you say slower growth, what are you anticipating or what are your projections in terms of growth as compared to, say, the previous decade?
So what our firm expects is about a 3.5–4% revenue CAGR over the next 3 years for the sector as a whole, compared to about 7 to 8% CAGR that we have seen over the last 10 years on the revenues.
All right. So half of the growth is what you're expecting. Speak about a couple of these auto names now, because, the big belief is post-GST rationalization, there would be, ahead of the festive season, a big boost coming in, at least at the entry level and mid-level demands. high level obviously is unperturbed in any case. So what are your thoughts out here? And after the run-up that we've seen in a lot of these names, do you think there are ones that still offer value? In what particular segments would they be?
Sure. So auto is one space we are extremely positive on. So we're getting this big GST cut. There's already an income tax cut boost that is coming. So there is a meaningful tailwind on affordability, and that is also happening after a relatively subdued period on demand over the last year and a half, both on passenger vehicle and the two-wheeler side. So we do believe that the GST cut is going to provide that big boost. It's happening at a very opportune time with festive around the corner. Between different segments, we believe two-wheelers is going to be a faster growing segment over the next 2 to 3 years. And it's primarily because two-wheelers have not seen the full cyclical recovery post the COVID. So let's say when I think of from the pre-COVID levels, two-wheelers are still lower on volumes. And that provides a very benign base for a very strong growth from here. So on relative basis, we expect two-wheelers to grow the fastest over the next 2 to 3 years, followed by tractors and passenger vehicles, followed by trucks.
Okay, so would that be a pecking order in terms of the auto sector as well? Two-wheelers are your top choice in terms of the stocks. I know you can't talk specific stocks, but in terms of the subsectors in the auto space, how does it stack up?
From a growth perspective, we do like two-wheelers the most. But having said that, when we think of our overall investment thesis framework, we generally want to own companies which are, let's say, at the intersection of demand as well as franchise. And so we do like some two-wheelers, we do like some four-wheelers. So it's a mixed set, but from a growth perspective, we do think two-wheelers are the best placed.
All right. And what about the plays here as well? There is increasing software composition on the autos. So you'd probably play names like Hexaware and KPIT, etc., or maybe play it via the hardware itself and not the software.
So again, no company-specific names, but I mean, generally speaking, when I think of a big demand in the auto industry, so generally the entire ecosystem benefits. Well, the OEM benefiting, the component makers benefiting, but yeah, no specific names.
Okay. All right, Nitij, it's been a pleasure. Thanks very much for joining in and speaking with us and giving us your perspective in terms of two big sectors, that is IT as well as the data center, which we could probably see growth, 5x growth is what they're predicting, and also autos, and they prefer two-wheelers in that space. We'll do one thing, we'll take a short break, but up next, Manisha Gupta will join in to go through the commodity space with us. Stay tuned.